Good morning, everyone. It is Julie here with your Thursday morning stock market news, where we're getting you up to speed with what you need to know as the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. We are just one more day until the weekend. As usual, this morning, we're going to take a look at exciting stock market news. Plus, we have a ton of notable earnings reports from both last night and this morning to look at, and we'll see which stocks are the morning's biggest gainers and losers. Don't forget, you can download the TipRanks app through the links in the description down below if you want to unlock the wisdom of thousands of Wall Street analysts as well. Now, let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning. Right now, Dow futures are down slightly at 0.01%, while S&P 500 futures are down 0.28%, and NASDAQ futures down 0.85%. Google is pitching its AI tool to help journalists write news stories. The New York Times reported that the tech giant has pitched the idea to several big organizations, including themselves, the Washington Post and the Wall Street Journal. The AI tool, internally called Genesis, can take in information, current events, and generate news contents. They think that the AI tool can act as a personal assistant for journalists, automating some tasks to free up times for others. Certain executives who saw the pitch described it as unsettling. The Google stock is currently rated a strong buy among analysts with an average upside of nearly 12%. Exxon Mobil is planning on building one of the world's largest lithium processing facilities in Arkansas. It is planned to have a capacity to produce 75 to 100,000 metric tons per year of lithium, and at that scale, the plant's production would equate to about 15% of all finished lithium produced globally last year. It is reported that the giant project could be built in stages, with modular trains constructed together or in separate locations near its future lithium production sites in South Arkansas. The Exxon Mobil stock is currently rated a moderate buy with an average upside of 23%. And GXO Logistics has signed a multi-year agreement with Heineken. They will continue to operate Heineken's warehouse, distribution, and secondary transport network to retail and wholesale outlets across the UK, as well as exclusively to Heineken's entire UK pub estate. This network manages more than 500,000 deliveries per year to more than 8,000 customers from point of production to retail and wholesale delivery. Analysts rate the GXO stock a strong buy with a very slight upside of about 1%. Now moving right along to those notable earnings reports. As I said, we have a bunch to cover this morning. In the after hours today, we'll be hearing from Intuitive Surgical, Capital One, CSX Corporation, and PPG Industries. In the after hours last night, we heard from Tesla. They did come out with an earnings and revenue beat, but saw their gross profit margin shrink slightly, and Elon Musk did give updates on next quarter's production. Musk said that third quarter production would be slightly lower than the second quarter because of normal summer shutdowns to upgrade equipment. The EV maker's gross profit margins fell to 18.1% from 18.8%, but was still within analyst expectations. Elon Musk also shared that their company is in early discussions with other automakers to license their full self-driving software in a development that could help boost the company's overall margins. Their Q2 earnings per share of 91 cents beat expectations by 9 cents per share, and revenue of $24.9 billion grew 47% year over year, beating estimates by $200 million. Of course, lots of analysts weighing in on the Tesla stock, currently coming in as a moderate buy with a downside of 13%. And you can see the wide range of price targets coming in just today, with a lot of holds and sells. One sell with a downside of 48%, and on the high end, a buy rating with an upside of 20%. We also heard from Netflix. They came out with a surprise jump in subscribers plus an earnings beat, but did fall slightly short on revenue. Sales guidance for their third quarter was also lower than anticipated, as they now expect revenue of $8.52 billion versus the $8.67 billion expected. They saw a jump of 5.89 million in subscribers, and earnings per share of $3.29 came in well ahead of estimates by 44 cents per share. Revenue of $8.19 billion did miss by $100 million. Their stock is currently rated a moderate buy among analysts with an average downside of 6.5%. And once again, we can see a ton of analysts reiterating price targets just today. And again, at big range, we have a hold with a downside of 29% and a buy rating with an upside of 15%. We then heard from United Airlines, who came out with both an earnings and revenue beat, plus an increase to their forecast. They increased their annual forecast for earnings per share between $11 and $12, which is up $1 on the low end. For their Q2, they reported earnings per share of $5.03, which came in 98 cents ahead of expectations, so a big beat there, and revenue of $14.18 billion, beat by $250 million, plus grew 17% year over year. Analysts currently rate their stock a moderate buy with an average upside of nearly 17%. Moving to the pre-market this morning, we heard from American Airlines. Their stock is slightly in the red though, despite posting record revenue and increasing their profit guidance. For their second quarter, they reported earnings per share of $1.92, beating expectations by 33 cents per share, and revenue of $14.1 billion, beat by $370 million. Analysts currently rate the American Airlines stock a hold with a slight upside of 2%. Also coming out with an earnings and revenue beat this morning is Johnson & Johnson. They reported revenue of $25.5 billion, which grew over 6% year over year, comfortably beating estimates by $860 million. Their Q2 earnings per share came in at $2.80, which was 18 cents ahead of expectations. Their stock is currently rated a moderate buy with an average upside of over 16%. And Taiwan Semiconductor did beat earnings and revenue expectations. However, revenue did decline year over year, and their future outlook disappointed. They said that their second quarter business was impacted by the overall global economic conditions, which dampened the end market demand and led to customers' ongoing inventory adjustment. Revenue of $15.68 billion did beat by $300 million, but fell over 13% year over year, and their Q2 earnings per ADR of $1.14 beat expectations by 6 cents per share. Analysts currently rate their stock a strong buy with an average upside of 20%. And let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by BRFSA, though I wasn't able to find any distinct news from today. Trading under the ticker BRFS, the stock is up about 8.4%. They're followed by Zions Bank Corporation under ZION, up 7%, and Livewire Group under LVWR, up 6.6%. And our biggest losers this morning are led by Verb Biotechnology. Their shares are plunging after a mid-stage study for their flu candidate failed. Trading under the ticker VIR, their stock is currently down over 40%. They're followed by Discover Financial Services under DFS, down over 12%, and Columbia Banking System under COLB, down 8.7%. So that is going to be everything for Thursday morning's stock market news. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments. I always appreciate hearing from you guys. Thank you all so much for watching. I hope you have a great day, and I'll see you back here next time.